Hey guys, Tony Denaro here. Welcome back to the channel. In today's video, we're going to cover PayPal, another stock that I have in my portfolio, one that I want to highlight to you. Maybe this is one that you want to look into as a value investor. PayPal has come down from its recent high just over $300 to today's current price of $62.50, a price which you have not been able to buy PayPal for since 2017. We're going to talk about the opportunity here, what I like about PayPal, and what some of the challenges are or things for you to look out for if you're thinking about buying or owning some PayPal. Let's get right into the info. Here's a quick look at the chart for PayPal. It had a beautiful run up in 2020 and 2021, all the way up to $310. As the economy started struggling at the end of 2021, PayPal started coming down. And we're going to talk about the reasons for that in just a minute. You can see that I bought some PayPal on August 18th for $57.95. The start of a position for me on PayPal now that it's come back down to a little more reasonable price level. And there still is some potential downside for PayPal. It could go down into the 40s or 50s depending on what happens with the economy, interest rates, and competition. More on that as we wrap up the video. Let's go through some of the positives first though for PayPal. When I plug some high-level numbers into my green, yellow, red dashboard for PayPal, we have a pretty good picture here telling us that this company deserves a second look, a deeper dive, if you will. For our long-term portfolio, we want to be looking for companies that have mostly green for the indicators I have here on the dashboard. PayPal looks really good. Costco looks even better. Then we compare that to something like a Mullen that is all red, or something like AMC, which has a lot of red and yellow. That indicates that these are very speculative plays and the price is likely to go down. So for your long-term portfolio, the bench strength of what you have your money invested on, I'd like you guys to consider looking for companies that have a history of revenue growth and profits, with growth in those profits over the long term. Let's take a look at some of those charts for PayPal. Our blue chip companies are going to be ones with a growth curve that is easily recognizable, one that is doing nothing but going up. And I want you to be looking for charts like this when you are analyzing companies and trying to decide what to buy, if you want the comfort of sleeping easily at night and not having an emotional roller coaster worrying about your investments. PayPal, you can see here on the top line, revenue growth going all the way back to 2014, a very nice upward trend in top line revenue. When we look at net income by quarter, it is also mostly a very nice steady march up, although you can see they have had a couple quarters that were problematic in 2019 and at the end of 2021. These are quarters, before you go buy PayPal, that you should do the work to understand what happened in those specific quarters. That net income also translates into positive earnings per share. Again, much safer plays if you're investing in companies that have a long history of positive earnings per share. Another nice thing that I see here on the chart when I'm looking at the shares outstanding, and if you've looked at some of the press releases, the shares outstanding for PayPal is going down. They have announced some time ago and initiated a share buyback. So they are buying back shares, reducing the float, reinvesting some of their cash and buying back the shares. And as investors, that is the type of thing that we like to see for our long-term holds. On the balance sheet for PayPal, we have cash and cash equivalents just over $17 billion, with a very long trend of mostly growing cash and cash equivalents. Total current assets, also a nice upward growth on that. Total assets over $74.5 billion, nice upward growth on that. Current liabilities, 41 million, and coming down over the last 2 or 3 quarters. The other thing that I look for is the relation of current assets to current liabilities. You can see that the current assets is higher than the current liabilities, that is what you want to see. You don't want to be upside down here. If you're investing in companies which have a much higher current liabilities than current assets, then that is going to be a much more speculative play, indicating that the company is going to have trouble paying its bills over the next 12 months. Always look for companies that have current assets higher than current liabilities. When you're investing in companies that have a upside down current ratio where the current liabilities are much higher than the current assets, you should be thinking to yourself, this company is either going to sell some debt, adding more liabilities to get cash on the balance sheet, or they're going to dilute shareholders. So always look at the balance sheet and know if in your next 12 months, if in the future of that company, you're going to be facing some problem with additional debt or dilution. This is how you find it. Current ratio, current liabilities versus current assets. Retained earnings just under $21 billion. Nice upward growth curve on that. And shareholder equity just under $20 billion. Very nice chart. Analyst forecast for PayPal over the next 12 months. Low price target 65, average 88, high $126. As we look at the 5-year forecast for PayPal, the analysts are expecting 2023 to come in just over $30 billion, going up to just over $46 billion in 2027. Expecting the earnings per share in 2023 to end up at $5.05, growing to $9.22 annually in 2027. So as we wrap this video up, you might be asking yourself, and I think you should, why has PayPal been under pressure? Why has the price been falling? There are a couple reasons. A lot of that has to do with competition. Another reason has to do with the fact that their CEO recently announced that he was resigning. Although on August 14th, PayPal did name Alex Chriss as the next president and CEO of PayPal, effective September 27th, 2023. He will also join the board on that date. To get a little bit of insight about the other things that people might be worried about with PayPal, if competition is truly affecting them, if there is some potential downside for PayPal in the next coming quarters, let's open up their second quarter 2023 results. And I will pin this for you in the video description down below if you would like to look through the entire thing at your leisure. Of course, if you have things that you're worried about with PayPal or things that you are positive about the company that I didn't mention in this video, let me know down in the comments below. A couple things that jump out at me in this report from PayPal. Number one, as we just saw on the previous screen, the analysts were sort of forecasting $5 earnings per share for 2023. And I see here that PayPal is communicating that they are expecting earnings per share to be around $3.49 for the year. So a little bit lower than analysts have been forecasting. That, of course, could make the price come down. And what could be affecting that? Well, obviously, competition and the fact that we see here active accounts is also declining. December 31st, 2022, 435 million. March, 433 million. June 2023, 431 million. Investors and analysts are going to want to see that trend of active accounts turn around in order to get the price of this stock to turn around. And if active accounts is not turned around, then they're going to need to improve operating margins and profits. So this is our first chat about PayPal. I'm going to be providing some ongoing coverage about PayPal whenever there is news, whenever they have a next quarterly earnings, 10Qs, 10Ks, 8Ks, anything important that you need to know about, I will be touching base with you. Always do your own due diligence, guys. If the market crashes, this stock is going to come down just like all of them will. If, on the other hand, PayPal, which is a dominant player in this space, continues to excel, I think that we're at the point where it's really starting to become an attractive price for value investors. I do have some more companies that I want to bring to your attention, ones that I own in the portfolio or ones which I recently added. CVS is going to be the one that we cover next, so you have that to look forward to. If this is your first time here, don't forget to buy and hold that subscribe button. Smash the like if you got some value out of this. I am Tony, and I will see ya on the next video.